Hi everyone, welcome to Toni on Real Estate Education. Today we're going to be talking about investment risks. Risks that come along with investment properties are inevitable. It would be unreasonable to think that we can prepare ourselves for every possible pitfall. So what do? We educate ourselves to the best of our ability. I will give a little insight into three potential investment risks: business risk, capital risk, and financial risk. Let's start with business risk. When I think about business risk, I think about unpredictable events. For example, let's say John decides to have a garage sale. He sorts through years and years of old stuff that he just no longer has any use for: clothing, tools, books, etc. He picks a weekend day to draw more people. He puts price tags on each item. He carries everything out to his driveway, sets everything up just right for a nice presentation, and sits and waits. And after a short few minutes, it starts to rain, and it doesn't stop. So John had a great idea. He followed through with his idea, which is always a huge step. But John just could not predict the weather nor the outcome. It's hard to prepare for business risk when, as we know, not everything goes as planned. Okay, on to capital risk. When I think about capital risk, I think about losing the money that I put into an investment. Let me set the stage. It's 2020 when Will decides to pursue his dream of opening up a restaurant. He has some money saved and believes with all his heart that it is time to make his move. He finds the perfect location and dumps loads of money into the restaurant. He spares no money in investing in a beautiful dining room. He buys the best appliances. He hires the best staff and orders the best food. Will has an opening day celebration date set. And what happens? COVID hits, and Will is unable to open his restaurant. Since he's not making money, he has to lay off his staff, and shortly after that, he has to give up on his dream of opening up a restaurant. He loses all the money he invested in his dream business that he was unable to start. Will losing his investment money that he put into a startup restaurant or business is considered capital risk. The last risk we will discuss in this video is financial risk. Financial risk comes from the unexpected inability to meet debt obligations in the future. For example, let's say Jen, a college student, takes out a loan to pay for her college tuition. As the semester goes on, one of her parents unexpectedly falls ill. Jen, who is now unable to work because she has to care for her ill parent, falls behind on tuition payments. The inability to pay back her tuition is considered financial risk. If Jen would have been able to pay for her college tuition in cash, financial risk would not be a concern. And there you have it, folks: business risk, capital risk, and financial risk. A quick look at all three. So if you like the content in this video, please hit the like button, share, and subscribe. All right, thank you. See you next time.